The first thing I would say is that I think in the medium to longer term, whoever wins tomorrow or later today is not going to have that much of an impact. I think for financials, if the Democrats do a little bit better, we could see a quick step down because a number of Democratic candidates have been making noise about getting tougher on financials. But I think there are a number of things that over the medium term are going to be positive. So things like, higher short-term interest rates are going to be positive, positive credit cycle, additional capital to be deployed, dividends to be raised. So I think there are a number of things working in financials' favor, in addition to be much cheaper than the rest of the market.
And that would also outweigh a potential leadership of Maxine Waters of the House Financial Services Committee, somebody who's been very vocally outspoken against Wells Fargo, who called for the top executives stepping down, who's been vocal against Equifax and has been vocal against Donald Trump in concealing his tax returns.
Yeah, I do. Again, I think there's been a lot of noise about getting tougher on financials, but we've had nearly 10 years of policymakers getting tougher on financials. So as a sector, there's just only so much more that you can really wring out. We have capital levels that are among the highest that they've ever had. They've been pretty conservative in extending credit. So I think even if we start to hear more noise among certain Democrats about getting tougher, to a certain extent, Wells Fargo kind of deserved it. They had some really bad practices, but I don't think that necessarily extends to the whole sector.
Dan, does this go to the old adage that gridlock is actually good for the markets? I mean, are you a believer that at the very least it preserves the status quo, which has been a pro-growth status quo for stocks?
Yeah, I am a believer. I think the statistics surrounding what happens after midterm elections, so despite any volatility that we're going to come across today or over the next few days as these results, get decided and analyzed, the statistics are very favorable. I think going back to 1950, 15 out of 17 midterm election years in the fourth quarter, average returns on the S&P were anywhere from 5 to up to 7%. And in fact, the following year, following a midterm election year starting around September into the next June, the median gain on the S&P was around 18% versus about 5% for non-election years. So I think despite what happens and despite where we are in the market cycle, I mean, certainly we've seen a lot of volatility more recently, and these election results can play into that. I think almost we're provided a good buying opportunity once we get past or get through the next few days or so, because historically, markets seem to be in good shape, in my opinion.